Ticker Talk. Let's dig right in here. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All trading and investment decisions are your own and done at your own risk. I, of course, am Kevin. I think everybody knows who I am. If you're watching the recording, why don't you do me a big favor and go smash that like button. Thank you so much for that. Let's dig right in here and take a look at the market. We're going to start with our major indices. We'll look at some of the key indicators. We'll look at some sectors. We'll see if there's any setups. We'll talk about kind of what went on today. So, without further ado, let's go here, and we'll get to that one in a sec. Let's start with the SPY. Take a look at the S&P 500. So obviously, big day today. SPY was up 3%. I want to zoom in a little bit here. And just take a look at this price action, because we have been sort of watching this bear flag. We had drawn this actually fairly early on. Bull flag, not bear flag. Anyway, we had drawn this fairly early on. We broke out of it, and that was great. And then we pulled back for a few days. And notice how we pulled back like right to the trend line that was the top of the flag. And then we bounced from there. We started to kind of bounce. We found that, support there yesterday. And then today, obviously, when Powell started speaking, and the market went crazy and our really nice rally started, it pulled right away from there. Just like it's supposed to. I mean, this is technical analysis in action right here. This is kind of textbook what's happened here. Obviously, there was a catalyst for it, but nonetheless, it worked fine. Now, look where we stopped today. Right at this major resistance line we've had drawn on the chart forever. Right around 407.42. All right, so what next? I feel pretty strongly that this continues tomorrow. Where does it go to? Probably won't be as big, tomorrow as it is today. We've got some important, macroeconomic stuff tomorrow as well. We have the PCE, Personal Consumption Expenditures report at 8:30 in the morning Eastern, before the market opens. That is the Fed's favorite inflation measure. And I posted about this in the Discord. Powell went as far today as to say what he was expecting from this report. And kind of, he pretty much told us, what we're going to do. He said basically, if core comes in at 5%, where he's expecting core to come in at 5%, and I think it was, I'll have to go back into the Discord and read what I wrote here, or what he said. He expects core PCE inflation to ease to 5%, and he expects PCE inflation to accelerate to 6%. So that 6% is actually lower than the expectations that we're seeing here. The market is actually expecting. So essentially, if we meet or beat those numbers, the market will rally. He's basically told us the market needs to rally, because the other thing that he said was he said the Fed could slow the pace of rate rises as soon as the December FOMC meeting. That meeting's about 2 weeks away now. I think it's on the 14th. So he's saying, all right, we could slow the pace. So that means it won't be a 75 basis point rate hike. It would be a 50 basis point rate hike. And, and then he went on to say, he basically told us what he needs to see, and he needs to see these PCE numbers come in the way he expects, or better. So if we come in at those numbers or better, then the rally will continue for sure. And I think he's already seen these numbers. He'd really be going out on a limb here, if he didn't know what these numbers were going to be. So it really seems to me that it's almost a sure thing that we rally tomorrow. As much as we can have a sure thing in the market. So that's how we start off in the morning. We'll find out about all this, an hour before the open. And then a little later in the day, we have the ISM manufacturing PMI. If there's a rally going on, that could throw a wrench into things because that's a pretty important number too. So anyway, we'll be talking about this. I'll talk about this in the morning briefing. Keep you or get you updated with what happens in the morning. But it looks like all systems go. The problem is, how do you play this now, right? And we had this huge update. We were up. The SPY was up 3% today. We expect a gap open. In fact, the S&P 500 futures are up about a 0.25% in the evening trading right now. So continuing a little bit higher. That's awesome. So it looks like we'll go higher. How much higher? It's hard to say. If you're not in this already, it's hard to get in here now because you're kind of chasing, right? Even though it is, it does look like we'll go higher, but maybe you want to be up at an hour before the open. Have some trade ideas ready. Maybe you just play the SPY or the Qs, and if these numbers come in as Powell expects, we should rally and rally further. Maybe you just buy it then. None of this is investment advice, of course. All right, let's take a look at the Qs because Qs are very strong today. Strongest index, up 4.5%. And we had very, very similar price action here in the Qs that we had in the SPY. We had been looking at this bull flag. Let's just extend that line down. Look at that bull flag. We broke out of it and pulled back down. And look at, we stopped at the extension of the top of that flag. And then we bounced nicely off of there. And we bounced right into resistance at about 293. Now, this is just minor resistance. We do have some stronger resistance overhead at 300. These are all very important levels on the way up. I think that, if the numbers come in like Powell said he's expecting them tomorrow, I think we can get into a rally that could last many days. But there's a lot of pieces of the puzzle that got to fall into place. And like I said, core PCE tomorrow. On Friday, we've got non-farm payrolls. It's really important that those come in the way that they're supposed to. If all that falls into place, then, a rally, who knows where we rally to? Do we rally up into this high from back in August? I think it's perfectly reasonable to expect that could happen. That we'd go up another. So that's about 40 points on the Qs, which should be, I believe, about 10%, 15%. Let's see where that is from here. So that would be about 14% from here. I think it's reasonable. If everything falls into place, it requires a good jobs report on Friday and some good numbers tomorrow as well. But that is not an unreasonable expectation. Although there's a lot of levels here, a lot of gaps to close, and a lot of resistance overhead. So there's still work to do. It's not going to be easy, but with this market now, if the market is going to be pricing in a 50 basis point rate hike rather than the 75, then we can continue to rally. All right, let's take a look at the Russell 2000. You can see the Russell 2000 is coming right into resistance. We have this downtrend line that we're about to break through. Now the Dow, I think we looked at this downtrend line in the Dow, and the Dow, I believe, had already broken through it. Yes. So this Dow Jones Industrial Average, we had broken through that trend line some time ago. We were looking at that bull flag there and broken out of that. The Dow is obviously the strongest index here, and also the least relevant in my opinion. But this Russell 2000 small caps index is an index that I really want to see get going. You know, it denotes that there is risk on behavior going on. And you can see the last couple of days, we fell out of this upward channel, but now we've come right back into it. We are at resistance, but, you know, it should be fairly easy with some good data. Should be fairly easy to break through this and start working up towards the top of the channel and through these resistance levels. Okay, let's take a look at the volatility index. And you can see that this, you know, is working really well off of its trend line. It's, you know, moved up over the last week or so, moved up, got into that trend line, hit it today, and then pulled right back. I think that if we rally tomorrow, we're going to be looking at below 20 on this for the first time since August. Can we get below these levels? In fact, it might be time to draw those in. Here we go. Look at those. I like that pair of lows right there rather than this pivot low. So what is that? 1941. Yeah, I think we could see. I think we could easily see us break through the 20, maybe find support of this 1941 on the first day, you know, of the rally. If the rally continues beyond that, I think that, you know, we're probably going to be looking at this pivot level down here, something like that. Okay. So that's exciting. All right, let's look at the 10-year yield. So we had a little bit of a bear flag here, broke down out of it, didn't break down too far. I expected that would have come farther. It did seem to find some support. It was up earlier in the day today, almost tagged that 21-day moving average and then pulled back on the Powell speech. We need to see this come down some more. Let's take a look at TLT. This is the 20-year bond price. This is not the yield. Okay, so this is, you know, this works like, you know, the yield is sort of inverse, right? So this one, you want to actually see this going up. Okay, so, you know, had a bit of a double bottom. And is moving up off of that, obviously in a huge downtrend, and, you know, potentially breaking that soon. So let's get some lines on this chart here. So from here, probably want to go there, maybe here. Still got a ways to go to, you know, to break this downtrend, but getting closer. And, you know, you could in the short term, obviously, we've got a bit of an uptrend going. So maybe we want to draw that in. So if we were to start from here, so, you know, I mean, we would have had this drawn like this, but that was broken recently, but now so that we would draw this here. So it's a new trend, but, you know, it is definitely looking a little stronger for bonds, which is good to see, because that will bring yields down. Okay. Oh, let's look at the dollar. Okay. You can see that the dollar has been trying to bounce. Now we had a bit of a bear flag here. I'll just highlight that one. Okay. There's your bear flag. We broke down out of that. Didn't really get the measured move at all, because the measured move would take us down below this trend line. But we came down a bit, and we're kind of drawing another bear flag here. So let's draw that one, kind of like that. All right, and let's move that up a little bit. That's better. Okay. So yeah, today, I mean, we were, you know, started the day up near the top of that bear flag, threatened to break out the top of it, which would negate it as a bear flag, and then we came right back down to the bottom. So that's good to see. I mean, this looks like it could certainly, you know, fall out of the bottom of this tomorrow. Maybe even get down through this 200-day moving average in this support level here. You know, if it's as weak tomorrow as it was today, yeah, we could be looking at a print, you know, below, you know, 105 and a quarter. That would definitely throw a scare into any of the longs who are still kind of hanging on to this, and could lead to a very sudden move, a very, much like these couple of days here, bringing us down to this trend line. Now, the one little wrench in all of this is we do have a little bit of a RSI divergence going on. So that's something we want to keep an eye on. Okay, let's see. None of the commodities were very interesting today. All the action, obviously, was in the equities. Some of the commodities had decent moves, and why don't we just blast through these quickly? All right, so this is gold. You can see the gold opened. Tried to break out of this little consolidation under the 200-day moving average. It went up and it pulled right back. But it is now in the after hours, it is gapping up quite a bit, which is sort of interesting behavior. I don't really understand what's going on there. That's kind of odd. The gold miners did really well today. They've made a nice move up. They've broken out of this. So this is a new high now, going back to this was June. We were back at this level on the gold miners. So that's interesting. I mean, this is, you might want to start looking. I mentioned this on the weekend that you might want to be looking for some miners to play in. Take a little taste in that one. Silver had a really strong day. It did pull back, but now you can see that it is gapping up as well, which is quite interesting behavior. And breaking out, and levels, it's now at a level we haven't seen since June or even May on silver. Copper. Oh, copper, come on. Okay, copper, we were looking at a bear flag here, and it did break down out of that, but it started to try to climb back into it, and now it has climbed up and over some resistance. So it's really nice to see copper working again, trying to work again, right? Trying to move its way up, because if copper is happy, markets are happy, the economy's happy. So this is a good one to keep an eye on. And DBC, the General Commodities Index. We came down to we've had a couple of times now, a couple of touches on this really important support level. It's bounced away from it again. It's up in got above this mess of moving averages this time, which is nice to see. This trend line can actually go away. And it looks like it's going to get rid of this gap, which has been filled. Looks like it wants to continue its move up. Oil is obviously a big part of this, but so are the metals. All right, so let's look at oil real quick. And we can see this has been moving off its lows, kind of broke down below some support a few days ago, and has rebounded nicely, put in a nice reversal candle on that day. Bounced right off the top of that trend line, right? Moving up, let's put some more distance between us and the lows here, if we're going to be bullish on oil. Nat gas is still doing what nat gas does, and that has been in a nice, reasonably smooth uptrend here. A little bit of volatility within it, but is still moving up nicely. XLE, the energy ETF. This has been a little chopping around a little bit here near the top. I think I mentioned this to somebody else earlier today, that this is I think this is waiting for oil to catch up to it. This is way outstretched oil right now, because oil has been coming down quite a bit, and this has been hanging out near the highs. So oil needs to catch up, and this will get going again. We'll skip XOP and let's take a look at TAN. TAN was interesting. We had this bull flag. We broke out the bottom of it. That only lasted for a couple of days, and then today we gapped up, and even before, Powell talked, we were already on our way up. We were gapping up, and we were getting ready to go here on the solars, and now we've broken out above the top of that. So this was this is really interesting price action here. I really like the look of this. We need to be looking at some solars, I think. So First Solar is one that we always look at. They got a downgrade a couple of days ago. I can't remember who downgraded them, and that's why it pulled back on Monday. And pulled back for a couple of days. Look at that. It didn't even touch this support, and then we get a nice big green candle today. Now we're kind of, you could call this, some people, if you're bearish, you're going to call that a potential double top there. I think this breaks out through that tomorrow and, continues its uptrend. So this one, might not be the best play. I think N phase is still consolidating under here, and it pulled back with First Solar. When First Solar got downgraded, it pulled back a little bit, and you can see it's bounced off its 21-day moving average, and this looks ready to finally break out of here. I think N phase might be a nice one to play in. Another one is Canadian Solar. Nope. There we go. This had kind of fallen out the bottom of its consolidation. It got whacked when the others were downgraded, but this looks ready to go as well. This one may be a little riskier, but this probably has a bigger payoff too, though. There are more. Just look around in this space, because it looks like something's going to happen here in the solars. All right, let's look at consumer discretionary really quick. This had a really nice move today. I'm starting to feel a little better about this space. We put in a double bottom down here. We had a little bit of a pullback, which is now a potential higher low. It's not quite there yet. This move right now has got to get out above these for us to call this a higher low. And it looks like it's going to. It looks like continuation here is in the cards. We can get above this 146.50 level. I think we're off to the races, and we can start looking at those consumer discretionary stocks again. XLI Industrials, not as strong as some of the other sectors today, and that's just fine. We're seeing rotation into technology, communications, consumer discretionary. That's great. That's what we want to see if we're going to rally. Industrials doesn't need to rally as strongly as the others because it has rallied so strongly. But it did. It continued to maintain a little bit of a higher high after a pullback. So that's great to see, right? Financials, same sort of thing there. These sectors are the ones that have been holding things up, and where money had been rotating into. These don't have to be as strong. Okay, let's look at technology. This was the strongest sector today. Outperformed the S&P 500 by 1.84%. Was up 5% today, and has broken through that downtrend line. Look at this. This is a beautiful that now we're into this gap. This is a little bit of a resistance here. But like I was saying earlier, if that PCI number comes in good tomorrow morning, this is going to go right through here. This could gap up right to this 200-day moving average. We got a shot at actually breaking through this 200-day moving average in technology. I'm shocked to even be saying that. But this is awesome. I kind of fear drawing in an uptrend line on this, though. I don't want to jinx it, but yeah, it's looking good here. We just need a little bit more, just a little bit more on that. Communication sector, the weakest of them all, was the second strongest sector today. Again, that kind of bull flag we've been looking at the indices did more or less the same thing here, right? Broke out of it, pulled back, and then today moved away big time. Lots of overhead resistance here. You know, this is still not out of the woods, this one, but you know, this is nice to see. It's really nice to see some strength in here. Let's take a look at some of those stocks in that sector, like Meta is, you know, the big one in the communications sector, and I mentioned on this tight consolidation here on the weekend, in the weekend video, and I did not like Monday's candle. You know, a red candle out of that, I thought, oh geez, you know, I thought we were doomed. But it managed to hang in. It held on there. It put in another tight day yesterday, very indecisive, and then we had the big day today. So you know, this has got to continue here for Meta. If this doesn't continue, if it comes into this 50-day moving average, for instance, and then rolls over from there, I don't know. I think it's lights out. Apple, you know, Apple's been having a rough time. Had a good day today, obviously, but and really needed to. But I don't know. Apple's just been so messy. It's hard to get a read here. You know, it does look like it's going higher, right? And will. If the market's going higher, then Apple's going to go higher. Amazon. So, you know, this is one of the biggest stocks in the consumer discretionary sector. And, you know, it's trying to, what we talked about last week in the ticker talk, we talked about how it was, you know, maybe this is the beginning of an uptrend. We need to adjust this little kind of uptrend now a little bit. I think we could just put that down there. You know, we'll need to adjust this line away, something like that. Yeah. It needs to keep going. You know, I mean, this is a very young, very immature uptrend, and it's got work to do for sure. It needs to start getting up to the top of this, certainly at least to the this gap here, and see if it can get into the gap. So still looking kind of weak on Amazon, unfortunately, although it was up 4.5% today. Netflix, what a day, almost 9%. Huge move here. Now we were looking at this rising wedge and thinking, okay, this is going to break out down the bottom of this. Drew this in on the weekend, and it did start to break out. It had a little bit of a reversal yesterday. If you look closely at that, you know, you can see that that's a hammer candle right there. Very prescient of Netflix to throw out a hammer candle there, and this giant green candle right back into its wedge today. Really nice move there. Google also had a really nice move today. It was forming a bull flag. I bought into this bull flag here, and I got stopped out the very next day. When it didn't continue, I thought, nope, it's not ready. And it's not one of the ones that I bought today. I did jump on a bunch of swing trades today, but this was not one of them. I kind of wish it had been. This worked really well today. Really nice move in Google, 6%. Microsoft, another 6% move there. You know, breaking out. There's that flag, that bull flag again, right? The breakout, the pull back to it, and then go up again. Classic stuff, classic technical analysis here. Huge move today, beautiful move. Congratulations if you're in this one. Tesla, 7.5% on this one. You can hardly see that on this chart. I mean, can you believe that? That's a 7.5% move. Obviously, Tesla has got a lot of work to do. But, you know, it is pulling away from this low. Will it continue? I don't know. I'm not as bullish on Tesla as a lot of people are. I'm actually quite bearish on it. It's going to be really interesting to see what happens when we get up to this 200 to 206 level. I should actually probably draw in the 200. It's had some action there. There it is right there. Okay. Yeah, watch out for these levels here. Really important levels coming up in Tesla. Semiconductors. We thought that these might break out to the upside. And, you know, they pulled back instead, but now they're trying to break to the upside. We've got a little minor resistance right here. Another day like this, and we're off to the races in our semiconductors. Let's take a look at AMD and see if it broke out. I know we were looking at the weekend when we saw some consolidation here. Still kind of in that consolidation zone. Let me draw this in here. Draw something like that. Looks like it could break out tomorrow. I bet you NVIDIA must have broken out of its consolidation. Yep. There it is. I don't like, we had this pullback and then we've got this giant green candle today. It's just, what do you do here? How do you, do you chase it in here? You kind of had to chase it earlier in the day, right? If you'd had a downtrend line on here or something, or when it started to break out of here early, that's when you had to get in. Healthcare. Really nice move in healthcare, and it wasn't even one of the stronger sectors, but this looks really good on this chart, doesn't it? And trying to break out of that resistance right there. Biotech, it is still got that long, slow upward channel, and occasionally it makes big moves like this off of the bottom of that channel, right? It's doing it again. Let's see, the defensives, they all had a nice day. I don't think there's any point in looking at those. It's not where the action is. What else should we look at? Oh, one other wanted to show you guys, because I got stopped out of Monster on Monday. When I saw this day, so this was Friday, and I was thinking about this, this does look kind of toppy here. And when we started pulling back on Monday, or was that Friday? No, oh, that's right. Yeah, here's Monday. This is Friday, Thursday. Yeah, okay. So yeah, that indecisive doji on Thursday. It had a little tiny red candle on Friday, and I had decided then that we get below that, and I had actually put my alert at, I think it was 103.23. That's where I put my alert, which is like right about there. I decided I would get out there if we broke below that, and sure enough we did, and we had a bad day on Monday and Tuesday. Look where we bounced though, right at the breakout level, just like it should have, and bounced up nicely. Unfortunately, I missed the re-entry here today, but I want to show you on the intraday chart what that looks like. Okay. So yeah, so we had that uptrend. We're looking at a 5-minute chart now. This was Thursday, and this is your indecisive day. It just goes sideways. So this after you've had a nice move, you've had a breakout, you've got some profit in the trade. I took some off on this day, and what I did was I drew a line across this, because I just didn't. Because other days, you can see that we had just kept going, right? And this day, it got more choppy, and it just didn't look like it was going to go. And I drew a line across here, and when it started, through in this big red candle, I took some of the position off here once we got below this VWAP. And then the next day, we come down some more, right? But only a little bit. But we threw in that red candle, and I kind of decided then that, if we break these lows, I'm out of here. So I just drew a line across the bottom of those and set my alert just a little bit below that. It was 103.23, and my alert went off in here at the beginning of this red candle, and you could see sort of some volume coming in here and pace increasing. I just got out right away, immediately, and slipped a tiny little bit on me, but was out about here, and quite happy that I got out. When I saw this rebound, I was like, oh, might have been wrong on that, and it didn't last, and then it's been going down ever since. And then we had that strong day today. And yeah, I should have probably been paying more attention, because this did give a nice entry, and it did it before Powell even started speaking. But you can see this big green candle here is when Powell started to speak. But the re-entry on this was here. If you look at this consolidation in here, you can see nice and tight here, broke out the bottom of that, but then bounced and started coming back up. You could have entered in here somewhere. I think a more conservative entry would have been after it broke above these highs here. So yeah, I dropped the ball on that. I should have been paying more attention, because that would have been a nice play in there. All right, so I just wanted to let you guys know, how I got out of there, how I exited the entire position in 2 pieces. What else do we need to look at? Okay, I'm going to, I've got some more tickers to look at for some people from the Discord, but you guys who are here live, let's take a look at yours first, and then we'll take, then after we get through some of yours, we'll go back and go on and dig into this list of tickers that I've got. So you guys know what to do. If you want to unmute yourself and let me know what it is you're looking at, or if you want to just type it into the chat, this would be a great time to throw some tickers in here. Or if you have questions about it, you know, what we've discussed so far about anything to do with the market or what's coming up the rest of the week, or whatever it is you want to go over, I'm game for it. And if nobody has any tickers, I will dig into this list. So I don't see anything coming up here. Maybe people are typing away. But yeah, while we're waiting, why don't we take a look at let's look at the semiconductor stock, Global Foundries for NS. Who is here with us in the meeting? So cool. All right. Okay, so this is Global Foundries. You know, let's just back up a ways here. Oh, okay, we're looking at everything. Where did IPO? IPO down here. So this really has just been quite choppy since its IPO. Is that a range, you know, anywhere from went up to as high as 80 down to about 37. So, you know, it's in the upper part of its range right now. You know, after putting this low, it has been making an uptrend. You know, we had a nice higher low here. We've confirmed this higher low and a couple of higher lows, you know, with this higher high. So this is good to see. We're definitely in an uptrend. Some people might, you know, draw this as a rising wedge. I don't think I'm ready to do that yet. But I'll tell you one thing I didn't like about this is, you know, we started consolidating up here. You can see that there was a really minor RSI divergence, and you're going to get that. You know, if you go up and you just consolidate at that level for a while, you are going to get some RSI divergence up there. So not a huge concern, but this red candle on Monday, that is a big concern. And then, you know, another red candle on Tuesday. It did stop right at the 21-day moving average. But, you know, look at today's action, right? It opened it, it gapped lower, it came down lower, and then it went up. I mean, this got saved by Powell. Let's look at an intraday chart of this and see, you know, was it going up before Powell, or was it really all on Powell? Okay, so here's Powell right here. Okay, so yeah, it did start going up, you know, before Powell was speaking. And, you know, the market was doing okay at that point too. So it was trying to save itself, but it kind of really feels to me, and I said this in the Discord, it feels like this one really kind of dodged a bullet today. But that doesn't really give me a ton of confidence in this. What was it up today? It was only up 2.35%. The semiconductor sector was up 5.7. So it's really underperforming its sector. So I don't know. To me, this one in the short term is kind of hands off. I think on any sort of market pullback, this one is going to suffer. It's going to suffer before the others do, you know. So yeah, if it's an investment and, you know, you're into the fundamentals of this company and everything, that's fine. You know, I mean, this little recovery, it is a reversal candle. I mean, it's a nice looking candle here today. I'm just really unsure about it still. I want to see it above this level here. I want to see it back up into this consolidation zone and then break out from there. So it's got work to do. It needs to go sideways some more from here. All right, so that's GFS. I might as well work through the rest of NS's here. I see Eli has also asked for some semiconductor stocks. So this one, the next one is MCHP. Microchip technologies, you can see we've been in a long-term downtrend on this one, much like the markets, and a short-term uptrend. It's broken through that downtrend now quite nicely. And, it's doing all the things that it needs to do to continue to go higher. And, we had a bit of a messy consolidation here. Let me actually extend this line because we had kind of an uptrend channel. And it broke out the top of that and now is, working nicely off of that trend line. So we could probably, it's probably going to make a new channel, in parallel to this one from here. So I would be paying attention to what happens when you hit the top of this up in this area. So if that happens tomorrow, that's going to be up around 82-ish. See how it reacts there. Does it go up and then does it do one of these and pull back down to the line here? Or, does it continue to ride along the top of that? Hard to say right now. I kind of suspect that, you get a little bit outside of this and then pull back, and maybe only pull back halfway into this channel before moving up again. But this looks good. We should look back a little bit. We need to draw some more sort of resistance levels in here. It's kind of at one now, really, isn't it? That one right there. Yeah, it's getting pretty close on that. A really minor one up here around 85. Yeah. So yeah, there's some levels for you to watch out for on the way up. CrowdStrike. I know you didn't ask for this one, but I just wanted to take another look at this here. This gap is horrible. But this is a really nice reversal candle here, and I think this one too started to reverse before. Maybe not actually. No, we can definitely thank Jay Powell for this one. Because it was just going sideways here near the lows. At least it bounced off the lows a little bit, but this was looking really weak. And yeah, here's Powell right here. Thank you very much. Nice move up. That made for a really nice looking reversal candle on the daily chart though. So can it continue up? Can this continue tomorrow? Can it get through this important resistance level right here and above, those two little highs? But it kind of looks like the recovery is on for this one, which surprises me a little bit. I thought that this might continue sideways. I'm not surprised where it bounced. Look at this support level that it bounced off of. Goes back into where are we here? Yeah, from June of 2020. You can see in this price action here, in this consolidation is where we pulled that level from, and it bounced right off of it. So that's awesome. Technically well behaved. Exactly what we want to see on this stock after this giant move down. Doesn't make me want to jump in it yet, but I do have a position, and I wouldn't mind adding to it, but I want to see more proof. I'm not quite ready yet. And if I miss the ad, that's fine. If it runs away back up into here, awesome. That's I'm okay with that. All right. So I see Eli has asked for some other semiconductor stocks. So let's take a look at SMTC. Oh, this one's been quite weak, eh? Earnings, big move down on earnings. All right. I think that's where that wants to be. All right. This is our COVID. Oh, this is going back to 2016. Wow. This level right here. Let's get that one in too. Okay. So those levels kind of worked a little bit there. Let's actually just move this one up to here. But you can see on one of those levels from way back in 2016, this $30.90 or $31. It like, look at all this price interaction with that level right now. So yeah, that's important. And we should probably get this this low in here as well. All right. So obviously, you know, we were in a downtrend, had some bad earnings or bad guidance, giant gap. Let's get the gap in because that's going to act as resistance. Oops. This is definitely going to act as resistance on the way back up. But for now, it looks like, you know, another good day in the market. And this is going to go up through here. And it should be able to go fairly quick up and close to this gap. I don't know if it would do it in one day, but, you know, maybe 2 days. So I don't know what you're doing with this one. Oh, Eli says solid financials, but big gap due to lower guidance. Okay, thank you. But they've been beating earnings consistently since 2016. Okay, so it was probably, you know, I mean, probably another one of these stocks that was overvalued, really, you know, probably really high PE, and you know, all those stocks get punished. It's funny, oh, PE now is only 12.5. And 4 PE is 10. That seems low for a semiconductor stock. Interesting. But yeah, you know, a lot of stocks like this have been punished. You know, if all you got to do is lower guidance, and it's like, look out. So this had earnings. Did this have earnings today? Was it this morning or after hours? Whoops, that's not where I meant to go. Oh, it must have had earnings after hours. Yikes. So where is it right now? It's around 30.25. Okay, so whatever this red candle is, it's kind of tried to recover from that. There's like no volume though, which is kind of sketchy. Yeah, this is sort of some weird action. We need to see some volume come in, but it kind of looks like this is going to be okay. Interesting. All right. Yeah, I think this is going to kind of be market dependent tomorrow. If you know, if the market's moving up, this looks like it's going to break through here. This could be a nice little play. You know, if you're looking to add to this, this may be a good place to add on this breakout. You know, assuming that we see the strength in the market as well. But yeah, it looks like, you know, sort of the recovery is on here. But the real, you know, the real test is when we get up into this 35 area, this gap. Eli says, "Hey, quick question. Where are you on trading high beta stocks?" I'm all about trading high beta stocks. What is the beta on this one? Not finding it. Anyway, yeah, I think, you know, I mean, so when I'm swing trading, 1.64. Okay, thank you. Yeah, I mean, that's pretty decent. Because when I'm swing trading, I want to be in high beta stocks most of the time. If I'm in a more cautious mood, then you know, I'll favor the lower beta stocks. You know, it kind of, you know, it depends a little bit on, you know, how the market's doing, right? If the market itself is extremely volatile, you know, sometimes those high beta names can just be a little too much then, because then they get really high beta, right? So, but yeah, I mean, you get better moves. So why wouldn't you like, you know, traders like high beta stocks. They give you better moves in the market. We're all trying to outperform the market. There is a downside. There's risk to that. They are riskier, right? You pay for that, pay for that beta, with higher volatility by definition, right? So does that make sense? Does that answer your question? Okay. So I think we're done on Semtech here. Like I said, I think it's going higher, but I think it's also going to maybe need to go sideways for a while too. It's really interesting to see what happens, once it gets to this gap, whether it goes up through it or not, or if it starts to pull back and consolidates in this area for a bit. There's a lot of these stocks that look like they're going to need consolidate for many months, and this is on that list. What was the other one? Oh, on semiconductor. Okay. All right. So this is one of the better looking semis. Up at, I believe this is all-time highs here. Let's get that drawn in. So you can see that, the last time we were up at this level, we pulled back a ways. Came back through its previous all-time high, chopped around a bit, and now it's come back up. Now, the first time it came up here, shouldn't be any surprise to anybody that it pulled back. But it's nice to see that it bounced, putting a little bit of a double bottom here, moved up, came up again, pulled back. And now what I don't like here, what's happened today is it's made this move right back into here all in one day. So we want to see some consolidation in here. We might not get it because if the market is strong again tomorrow, and it's got a really good chance to do that, then this might just blast through here. And then I would want to be really cautious on this. So yeah, if this broke out of this level tomorrow, I don't think I would play this at all. I think that what would probably happen if it did break out of here, because it's already moved so much, it's probably over the next couple of days going to pull back and then test this level, see if this level will support, and if so, then it will bounce away from there. But yeah, getting into this now, I think is chasing. I think you got to just let it go, see if it pulls back and bounces, and that would be a much better entry on this one. But yeah, I mean, this is strong. It's in an uptrend. Oops. It's in a really nice uptrend. It's just kind of been pausing for a little bit, but there's really no signs of weakness in this. All right. I see Justin has asked for Merck. Whoa, look at that thing go.
What's up, Kevin? How you doing?
I'm good, thanks. How are you?
Good.
Have I not been looking at this thing? So how long have you been? Are you in it?
Yeah. So I didn't do anything since we last talked about it last week.
Okay.
When I showed you my chart, I'm not actually in front of my computer right now. I was actually just finished working, so that's why I wasn't able to talk sooner. But
okay.
I have about a 5% gain on it already.
Sweet.
And I'm in at like 104.70. So I'm just thinking like I'm kind of happy with that profit already, but kind of want it, the position isn't really big enough for me to take some profit and let it run. You know what I mean? I kind of have to it's like a small enough position where I'm either in or I'm out, and I'm just trying to think like, am I happy with 5% or should I just kind of see where it goes?
Well, that's it. I mean,
with maybe like a tight spot or with like a tight stop or something.
Yeah, that is definitely a way to play it. I just want to. All right. Oh, I remember. Yeah, I think I remember this. We were looking at this level from your chart, right?
Right.
This is like back to 2000. Okay.
Yeah.
All right. So Actually, no, I don't think we did look at this level from your chart, but okay, this goes way back to 2000, so it is all-time highs. Let's move back. So you know, it's all blue skies ahead, right?
Right.
Which is cool because there's no resistance overhead, but it also makes it kind of difficult to think, okay, where does it stop? Where does it go from here? And you know, that's you know, you could use Fibonacci extensions. I don't really use Fibonacci extensions, but that's one way to look at it. You could look at the previous move. If you take say this move and
Yeah.
then move that back over to here, and so that takes you up into around 116. So that's a totally reasonable target. Sort
Okay.
of a 116 area. Now, were you here when I talked about how I exited Monster?
I was here, but I was in the middle of painting.
Okay.
So I was like kind of paying attention in and out, but I did end up exiting Monster too.
Okay. Cool.
I sold it for like a 2.5% profit. I just like on the initial breakout, I held it for like, I don't know. It showed downside like downward momentum like on probably yesterday or the day before yesterday. I just sold it immediately.
Okay.
And turned out to be the right choice.
Yeah. So I sold right here. I'm actually not going to go over this again. You might want to actually go back and watch.
Yeah.
I'll chapter mark it.
Okay.
Right? So go back and watch the Monster part, because I talked about what went on in here, and I looked at the intraday chart and showed in the intraday chart, because what I'd done was I had taken a little piece off here on this doji day, and then on this on Friday, I was paying close attention to this action and decided that, okay, if it comes back down below this level on tomorrow, Monday, I'm out. So and that's exactly what I did, and you can see how that played out on the 5-minute chart, and is really kind of a textbook. So I just want you to be
okay. Cool. Yeah, I'll go back and watch it for sure.
Okay, because if Merck does something similar to that, which is not showing any signs of doing yet, that would be your reason to get out. Now, for instance, coming up here where it puts this little doji in, you might have maybe put a alert or something near the bottom of that, or just kept an eye on it and the open and gone, you know what, if it starts to get below there, maybe I take a little piece off, maybe I take a third off. If it goes much farther, maybe I take the whole thing off. And you could do something like that. So watching this price action, day on day here, especially when you get dojis like this, because you often get little dojis like that when an uptrend is ending. It's usually the first sign. And you can see how, you can look at Merck, look at this one here, right? How you had, what they call a shooting star or an inverted hammer, where you open, you go up a lot and you pull back hard. That's a big warning sign. I'm surprised it even gapped up the next day, but it did. It gapped up. It gapped up to here, went up, pulled back, it gapped up here. It came down, went back up. This action here is sort of like, oh, it's time to get out of this, right?
Right.
And then you had a nasty day the next day. So that's the sort of thing you want to be watching for. But
okay,
it's very different in character to what is happening right now. Right now, it opens, or it gaps up, and it just keeps going up. Today was a bit of a warning day, maybe. Let's go to the intraday on this. So today, you opened, you came down, and so this would have got a little bit scary in here. But it's this candle right here kind of made it maybe like it's almost like capitulation here, except there's almost no volume, which is weird. But anyway, it bounced from there. Once this bounces here, you get this green candle, you're probably not sweating as much. But it still only went sideways until Powell came in and saved the day. But then look at this, really moved into the close.
Yeah.
So
I was getting a little nervous when it dipped down in the beginning of the day.
Yeah.
But I learned from Celsius, because we talked about Celsius last time.
Yeah.
And so I was like, you know what? Just wait. And waiting definitely paid off. And it kind of helped that like I was working today.
Yeah.
Because I wasn't able to check my computer all the time. Yeah, but I mean, I think I mean, after like a big move like that in the beginning of the day, would you recommend just waiting? Because sometimes like I feel like I want to sell, but it's kind of just since I've been waiting, it's turned out you know all my trades have kind of been a little bit better. Like I've been able to stay in a lot more trades because of that.
Yeah, I would have been watching the previous day's low here. So you came down in the morning, but you bounced really quickly, right? So that's you some strength. There were buyers here, right? I wouldn't have really started. I would not have liked the way this started coming back down, and I would have watched these lows, and I wouldn't have put my stop right below here, but I probably would have put a stop below here. Now, if we go back to the daily chart, I wouldn't have been Xing all of this, but I probably would have taken a third off just below here. If it didn't rebound immediately. Well, thankfully that didn't get there, right? It didn't even get to the previous day's low, and then it bounced nicely and the buyers came back and started going sideways. So that sort of reinforces that this is the area that you maybe want to be stopping out some of or conversely, maybe after seeing it do this, maybe when it starts to go parabolic here at the end of the day, maybe you want to take a third off up here, which is another way to play it, right? You're looking, wow, look how steeply this is going up. Look at all this volume that's coming in here. You almost want to be selling a little bit into this, maybe only 10%, but selling into something like this is always a good thing to do. You can always add it back in too, right?
Right. Okay, cool. Another one I played this week too, Kevin, was I ended up playing Google and Boeing.
Oh, cool.
But I got stopped out. I had a pretty tight stop right away. Yeah. But then, like today, it showed strength again, right?
Yes.
So what are your thoughts about like jumping back in? Do you wait for like a better setup, or do you kind of play off like?
No, I mentioned Google earlier.
Okay.
I had played it and stopped out. I stopped out on this red day here, Friday, because it just it didn't continue, and so it's like it's not working. I'm out of here.
Right.
And I wasn't watching it. I had other plays that were better setups when the Powell thing happened, and I was really busy. So I didn't see Google do this, but it would have been a nice play to get in. So see this, you've come down. Okay, so you tried to break out. You've come down. You put in a reversal candle yesterday. It's a little bit of a hammer, right? The volume isn't awesome or anything on it, but hammers work better when there's good volume. But anyway, so you got this hammer. And then you go up today. No, so how much of that was Powell? So what's the level? You look at the high of that. Look at the high of that hammer, especially after you gap down, right? You think, okay, if you go, because earlier in the day this was red, so you're thinking to yourself, okay, maybe if we go red to green, I want to get in here. So that level would be about 96.32. So where is that on an intraday? 96.32. So that's before Powell speaks. So there's 1 o'clock. He spoke at 1:30. Okay, so yeah, you can see you're starting to step up here. See how this is making higher highs and higher lows. Nice tight consolidation there. Yeah, that's a decent entry because this level totally corresponds with what we were looking at. The high from the previous day. You can see it. You see where it says previous right here. This dotted line.
Yeah.
Or sorry, the solid blue line is where the previous high is. Your breakout right there, that would be a nice re-entry point if you're really paying attention to it and you really think it's going to go. Otherwise, you can get in here on the Powell thing.
Okay.
And you can be chasing. When the market starts going up, like here, let's look at SPY or Qs or something on the intraday. Here it is, right? He starts talking. When the market goes up like this, and you put the pieces of what he's saying together, when he actually said, he sees slowing rates at the December meeting, then it's like all systems go. You got to be buying, and you got to not be afraid. You just have to chase. And the sooner you chase, not hesitate, the better. And if you really want to be conservative, you wait for this little consolidation and then you buy the breakout of that consolidation. So there you are. There's how you do it on the SPY. It's going to look the same in the Qs. And whatever it is that you're buying, you're using, whether it's the SPY, the index, or it's individual stocks, you just got to be in here buying. And ideally, knowing that this event is coming, you have a list of setups, you have a list of stocks that you want to go in that you think are going to be the best breakouts, maybe, or something like that. Ones that are really close to breaking out, or ones that look like they're really ready to come off a bottom or something like that. Have a list of these stocks. And when this happens and the market, he says something good and the market reacts as it should, you just jump in as fast as you can.
Okay. Cool. No, thanks, Kevin. Appreciate it.
Yeah, no problem. And you mentioned Boeing as well. We'll just try and be real quick on that one. Yeah, so Boeing, that's right. We've been watching, we have this big cup and handle, a little bit of a bull flag there. It's looking a little indecisive in this area. How did it do today? Yeah, it was only up 2% today. Yeah, so I don't know. I think Boeing's potentially sketchy. I think they're a better place because it's not doing it yet. But it could, maybe it just needs to get above this neckline, or cup line, or whatever you want to call it, the rim of the cup. That's what it is, and to get going and start getting some momentum. It doesn't look bad or anything. It just doesn't look like it really kind of wants to go.
Yeah, I agree. It doesn't look convincing.
Yeah, exactly. All right, so that's all of those. All right. Anybody else want to unmute and anything you want to talk about? Or you can just type any more tickers into the chat. I've got another one for these are for KC Dots, Duke Energy. So it says it's an electric utility, but I thought these guys were. I thought this is a coal company. Maybe they primarily use coal to generate electricity. Yeah, you can see that this got hit really hard here when energy came down. Back in September. Pulled back really hard, but it started to bounce nicely. But if we're looking at a weekly chart or something on sort of a more intermediate term time frame, this is looking like a bit of a bear flag almost. Although I think it's been going on long enough now that this is a fairly bullish pattern in here. So whoops. All right. And some resistance levels. Levels are a little messy on this one. Doesn't behave totally nice, but it's a fairly decent one right there. Here. Oops. That's good enough. Let's just leave that for now. Okay. So yeah, so it's come up nicely through this resistance level. Even had a little pullback to the breakout level. I'm just going to move that up a hair. works perfectly right there. Yeah, had a little bit of a breakout above there, pulled back to it, and then today bounced off it and starting to move higher. No reason to believe this won't continue higher. It's interesting to see that the last couple of times it's pulled back, it didn't come all the way back to this trend line. So, you know, that's almost telling us the uptrend may be accelerating here. So that's interesting. This looks fairly healthy. Watch out for the 200 and 100-day moving averages overhead. And, you know, this resistance level up here at around 105. Yeah, this, you know, this trend looks like it will continue. Earnings are still a ways off. It's just paid its dividend. So, yeah, you know, looks like no problem getting to 105. Might have some trouble at 105. Maybe needs to go sideways a little bit under that level before breaking out and then attacking these other levels up around, you know, 112 to 115 or so, I guess. But yeah, it looks all right there. And there was one more. Oh, Palantir. All right, what do we got going on here? All right, so we had that low. I think this would be an all-time low, actually. Let's change that. Yeah. A little bit of support here, but there's also another level kind of down in here, sort of ish. Yeah, I mean, this one doesn't look great. I'd say as long as it's holding above these lows here, maybe these lows here, you know, you're okay. But, you know, it is trying very tentatively to make higher lows here. But it really needs to come up and start making some higher highs. I mean, the last time I did that, you know, it was making, it had some higher lows here and it had some higher highs, and then it just completely broke down, you know, coming into earnings. But it's been, you know, hanging in more or less since earnings. So I don't think this is going anywhere in a hurry. I think this needs to spend a lot more time going sideways. You know, it's this needs to find an area in here to consolidate, and maybe, you know, maybe this area is going to be quite wide, and it's going to go back and forth between 7 and 9, say, or 7 and 10. But I think there's months, even quarters, or maybe a year for this to go sideways before you can even think about it breaking above like 1050 and moving up into you know, trying to get some of this back. There's just so much overhead in this. There's so many people who are trapped in this, no doubt. You know, maybe you know, getting up into 20 to 22, but the 25 level, when if it ever gets back up there, that's going to be a really hard one to get through. So yeah, I think there's definitely, if you know, if you're trapped in here, I think the bottom's probably in, unless something bad happens to the company. You know, if you're looking for a play, I think you can find better plays than this. I think there's just so much overhead, so many people trapped and going to want to sell when they're breaking even, that any move up is going to be met with resistance. It's going to be met with supply, right? So it's going to be hard for it to move up. It's going to take a long time. All right, so Shills has asked for, could you do AAP and XOP charts for before? Thank you, and also Neo. Okay, what's AAP? Oh, advanced auto parts. Yeah, okay. Whoa, earnings were not good. Not good since earnings. All right, let's go back. Let's see, how far do we got to go back here to find some support? Okay, interesting. Well, in the very long term, I mean, this is in a nice uptrend. It's still in the uptrend. You know, so if you're an investor in this now, you know, things are not looking as bad as, you know, maybe they could be. Just want to zoom in a little bit here on this trend line. Okay, yeah, that looks good. So yeah, there's your, like, you know, forever trend for the last 2 decades. And we're not down on that line yet. It cut through there a little bit on in COVID, you know, whatever. That should be expected. But yeah, I mean, you know, this doesn't look so bad. I mean, nasty pullback, you know, because we've pulled back from 242 down to 140, so down $100. I mean, that's a big move down, but in the grand scheme of things, it's, you know, it's not too bad, and it looks like we're in an area where we should find some really good support. So let's draw that in here. Right in, it's, you know, I'm looking at this back here, right? And I see it right there, because, you know, we've come down. If you look at that, if we zoom in a little bit more, you know, it came down here, pretty decent support here. Every time we came down here, it went right back up. Out of, you know, every time it cut through, went right back up, which is, you know, really nice to see. So, you know, that's an important level. Obviously, you know, it took a lot longer to get up through there, back there. And even post-COVID, right? Look at, you know, that level supported again. And here we are coming in close to that level. So if it cuts through here, I wouldn't be too concerned. I wouldn't really get too concerned until you break this trend line down here in around, you know, 125 area. You know, if you're in it. If you're not and looking to get in, oh, so you're still looking at the weekly here. So let's actually, yeah, I want to get this downtrend in here before we move away from this. So we do have a downtrend here. It accelerated slightly recently. Okay, all right, let's move on to a daily now. And you can see where I've marked those trends in. Here's that major support line or level. You know, yeah, it's good that we're just above that. We are finding support. We've consolidated. Whatever happened yesterday, not great, but then again today, nice reversal candle. So we've got a pretty decent base going on here right now. It may need to do this. Obviously, earnings or guidance, we're not friendly here, right? But it looks like it's going to be in recovery mode now. So let's draw our gap in here. Because obviously that's probably going to be a little bit of resistance on the way back up. This is one that you're just going to have to give it some time. I think this is going to need to go sideways. It's going to have some work to do to get up and start attacking these downtrend lines to, you know, be getting up into this 185 area again, back up into the gap. That's going to take a while to repair, and it may not happen until next earnings, or the earnings after even. It's going to take time to get out of here, but I think there's a good chance the bottom is in here unless this company comes out with more bad news. All right, let's look at XOP. So XOP is the oil exploration and production ETF. We looked at oil earlier in the session. We didn't look at this ETF actually earlier on. We usually do, but not today, because it's just kind of like what I mentioned earlier with oil. I'm not sure if you were here or not, is that these ETFs had sort of run away from oil, and oil kind of needed to play catch up. So, you know, we should, you know, if we look at oil, look where oil is compared to these ETFs, right? I mean, oil is way off its highs. It has been coming up a bit, but it's still, you know, like I said, way off the highs, much weaker looking. Although, you know, oops, that's gold, sorry. again, you know, way off the highs. Looks similar to that gold one, but you know, weaker looking in here, but bouncing now. Okay, so I think that these ETF, these energy ETFs, have sort of um, got ahead of themselves a little bit. Oil's got to catch up. So it's fine if this just goes sideways for a little while oil is catching up. Eventually, these will move again. These will break out to the upside as long as oil is moving up. Now, if oil fails and starts to roll over, I think that we could see this roll over. I think this level, this 147 level here, or maybe the 50-day moving average, will hold as long as oil is moving up. If oil rolls over a little bit, then we could be looking at this moving down in this 136 area, this gap right here. So that's what I think is going to happen there. All right, let's take a look at NEO. All right. So, yeah, this had a nice day today. XPEV, I think, had a really good day. Yeah, okay. Yeah, oh, wow. 47% on XPEV today. Crazy. What was NEO? 21%, 22%. Okay, cool. All right. So obviously, Chinese automakers doing well. Where does this go next? Got a little bit of resistance here. Kind of comes off this pivot, right? Let's draw that in. You know, I think if the market's up again tomorrow, if China is up again, has China opened yet? No, I don't think China's opened yet. You know, China's been doing really strongly ever since the big pullback on their, you know, protests and everything, and them now easing up on restrictions, COVID restrictions. You know, everything in China is just kind of going crazy. So I don't know, how long does that continue? You know, it's so hard to figure out what's going to happen in China, how long a move will continue, because things just change so suddenly there. But, you know, so far so good. So this looks like it's really trying to move out of this consolidation down off of these lows. And if it can continue higher, I mean, you know, come up and attack this 16 level, I would think that once you get there, you want to see a move sideways, because I don't think it's going to have enough. There's not going to be enough power, enough momentum to really kind of get through there in one go. But if it got up there, moved sideways for a few days, a week or so, and then broke out through, that would be awesome. That would be a healthy way to do that. All right. So yeah, definitely keep an eye on this. This is interesting, and XPEV as well, along with it. You know, as a pair, because they're going to feed off of each other, I think. All right. Eli is looking at some day trades in Tusk, Vale, and BKR. Mammoth Energy Services. Okay. So this is in the OAH, or might be in the OAH ETF. It's definitely in that sector, right? So really quickly looking at that, what's going on here? This might be trying to turn up. Okay, so interesting. All right, so USK. So when I'm looking at day trades, right? I'm always looking at the daily chart first. What is going on the daily chart? Are there levels here that we should be playing off of? And yeah, there are. You know, in around here at 619, that's a fairly important level. So let's get this on our, you know, we're going to transfer this level over onto our daily chart. But yeah, it looks like this, you know, a breakout above 619, totally playable. and you know, that kind of, I don't think I'd want to play this to the short side at all. This isn't an uptrend. This isn't an energy. Energy is stronger rather than weaker. So I guess you're looking for an upside play here. So okay, let's go look at this on an intraday chart and see. So intraday, I mean, we're just kind of messy. So that makes this a little bit more difficult. But yeah, you can see, you know, the previous high here, maybe a breakout above there. If it does it, if it just runs right up into that tomorrow, kind of like this candle, I wouldn't want to play it, right? I'm also actually wondering about the volume on this, if there's enough volume in here to make this playable. I kind of don't like, oops. I am obviously losing it a bit here. Okay. What's our volume? Oh, only 278,000. Yeah. Yeah, it's hard to trade day trade stocks with low volume like that because they get gappy, like you saw on the chart, right? You know, you get these gaps, you get these totally outside moves, so it's hard to control your risk in this if you're day trading this. So I kind of like that breakout still as a swing trade, but not really as a day trader or a scalp. I think you've got to be able to plan this trade with being able to take a lot of risk. So you know, if you wanted to play the breakout, you know, on that daily chart, you really kind of got to risk to below here. You know, so you're risking down to near the low on this day because it can move down here really fast. So although that is only about 30 cents of risk, that's not too bad. All right, let's look at, is this Valet? Another energy company? Yeah, it is. Okay. All right, so let's look at the daily chart on this to see what's setting up there. All right, so this is just, yeah, this is interesting here. Big gap up for no apparent reason. They must have had some news here for this gap up. So it's a gap and go. The play would have been on the gap day, once it got above this level here, that would have been a way to play it because, you know, gaps are hard, right? So let's look at this gap day, see what happened on that day, if there were any setups there, and see if there's anything that looks like it might be coming. Because there's not a ton of resistance overhead, there's a little bit. Find out what this news was too, though. Find out what this catalyst is to make it do this. All right, so let's see what happened here. All right, so yeah, this is totally going sideways. Overnight, something started to happen, starts getting some volume in the pre-market, goes up, pulls back. Yeah, so, you know, the people who are day trading all the time probably would have bought this right at the open, seeing that it, you know, break out of that consolidation and starts to go, they would have bought that. It didn't really give a bunch of good chances after that. You know, there's this consolidation here. This one is a no-brainer if you weren't in it. You know, you just draw a line across the top of that, and if you just draw that line all the way across, right, that's an important level right there. This is a level that you want to actually extend across into the next day. So yeah, you can see when you break out of this level, you buy it there. A bunch of people did. You can see an increase in volume right here. Didn't go very far though, unfortunately. And then it just started moving sideways the rest of the day. That level supported, acted as resistance a little bit. So if this comes back down, you might want to think about playing off that level because that's a really important level right there. You may want to, yeah, I don't, you know. Okay. You know, and there might be another one right here. You know, this kind of area here, because that one got tested a little bit too. So this one is not as good, but there is something there. 1643, 1645, somewhere in around there. That's another level you could watch out for. But this has definitely got way better volume. You see how that, the levels and everything work better when it's got better volume, right? So it makes it easier to play. But yeah, this has definitely got some levels from the few days before that you can play off of tomorrow. So yeah, just start drawing some lines, draw them across, and watch out for these. The high of the day, the low of the day. Probably this level here actually too. I bet you that on a move down, this level could come into play here as well. So get that one in too, and that sort of keys off of that right there. Yeah, 1625. That makes sense. Okay. So there's some levels for you on that one. And let's look at BKR. Oh, Bigger Hughes. Okay. Yeah, another oil services company. Go back to the daily. Yeah, this is messy, this one. It's weird that a stock that trades this much volume is all gappy and messy like this. This thing is trading like 8 million shares a day, and it's all wicky, and this is going to be tough to day trade, I think. Yeah, I don't like those wicks. Okay, let's look intraday on this. Yeah, it looks better. How do levels hold up on this? Yeah, I don't know. I don't think this one is a good day trader. Yeah, sorry, I don't like this one. And so I mean, you can see where some of the levels are, but they just don't seem to really do anything. They don't hold. They don't, they don't really tend to move. I mean, here you had to move down off of this one, but it immediately bounced back. Yeah, this is going to be tough to day trade. I'd stay away from this thing. All right. That's it. Are there any more last minute tickers? Oh, you're welcome, Eli. Yeah, I mean, sorry to poo-poo on a couple of your tickers, but sometimes, knowing the ones to stay away from is just as important as knowing the ones to get into. All right. So yeah, if we don't have any more tickers, if I don't see any come in right away, then I think we're gonna call it a day. Some kind
Hey,
of
Kevin.
Yeah. Hey.
Hey, I don't have any tickers. I just wanted to share something with you guys. So, I've been trading since September, and since before September, I was like sitting on cash and was really learning technical analysis through your lessons. And for most of the year, I was in the red. And from trading since September, I'm back in the green in 27 by like 27%.
Oh, nice.
Yeah, and it was because of a lot of stuff I learned on here. So I just want to say thank you, man. Appreciate it.
Well, you're welcome, and I'm really happy to hear that. I'm really glad that it's been helpful, and I mean, I can also tell you're putting the effort in too, right? You're putting in work. Whether it's watching my videos or hopefully other people's videos as well, right?
Right.
Because I have my style, definitely have a certain style myself, and I think that especially early on in your journey, it's really good to just watch other people and see whose style just sort of suits your personality, right?
Right.
So.
Yeah, that's it. Oh, thanks, Marianne. Appreciate it.
Yeah, I need to work hard to get there. But
it takes time, and it takes some people longer than others. And the most important thing is to buy yourself time to learn. Have stops, trade small, respect your stops, don't make any big mistakes, don't take any really big losses, and then you'll be there through, you know, the learning curve, and be able to come out the other side of it.
Can you repeat that, what you just said again? Because I think I need to hear that a million times.
Stops. Respect your stops. Number one lesson, you know, is respect to those stops. You've got to be disciplined. Keep the losses small. You know, if you do that, then you'll still be here with us. You know, and you'll get past that hard part of the learning curve and get to the place where Justin is now, where he's becoming consistently profitable and you know, and making gains. So yeah, you'll get there.
Thanks,
All right, Kevin. Thanks, you guys. I'm actually going to dip out right now, so I'll see you guys next week.
Okay, cool. And yeah, so Eli has asked, any chance I might have a session on what kind of charts, tickers is suitable for swing trading, day trading, scalping. Yeah, I think, how can we do that? Yeah, I think we could do something like that. I mean, it's sort of hard. I think, you know, the thing to do would be to go through, you know what I think would be really cool, Eli, is in these ticker talks, if you you know, if you didn't actually mind speaking, if you got a mic and if you don't mind sharing your screen or something, you know, if you day traded something and could show your trades on the chart, and then, you know, and if a bunch of us did this, right, if we all brought a day trade to a session, I mean, we could maybe even do this on the next ticker talk. We could, you know, focus it on day trading, and we all come in with a 5-minute chart. You know, we will look at a daily chart, a 5-minute chart, or maybe 50-minute chart. Look at some of the stocks that we actually traded or thought about trading, and critiqued them, and looked at how things might have played out. I think that would be a really cool session. I think it would be awesome if it was really interactive, rather than me just sitting here, you know, talking about, you know, what kind of charts I use. We could start out with that, and you know, I could show you my charts and show you what I've got on my charts and how I set them up. But I think it would be really valuable if we did that, and then, you know, you guys brought some tickers, and we looked at how you traded them, and then we could then maybe look at, you know, how could you have maybe done things differently or whatever, you know, especially if it was a trade that didn't work out, or why did you do what you did. I think that's an excellent way to, I think, learn, you know, more about day trading, rather than me, you know, sitting here being the talking head kind of thing. So I think I haven't done the calendar yet. So does next week work for you guys? If Eli and Marion and everybody else, you know, I'm sure Justin will try and make it work for him. If we were to focus next week's ticker talk on day trading, would you guys be here for that? Or is there a better, is there a day that works better? Okay, cool. All right.
I know I came in late today, but and I'm sure you've already talked about SPY, right?
Yes.
Yeah, yes. I did it. I don't know. So I have been a bit scared to get back into the market, because I did well in September. I gave everything back in October and then lost hugely this month. So I'm like trying to recover from that. And so I dipped in today, and I initially had puts, and then I closed them out quickly, which I'm glad, when it reversed.
Good.
So I was proud of myself and took like a little loss. And then I got quickly back in with a call. And all this I did with a spread so that I would hedge the loss.
Good. Okay, good.
And then when it pulled back a little bit, then I got out. I was like, no, you know, because I got a bit scared, then it went back up. I wasn't too upset because I had broken even when it pulled back. But I guess my question is, what, not necessarily what, because I think that sticking, like what you just said, sticking to my rules and the stops, because I did have a stop there, like if it crosses this, I'm gonna get out.
Yeah.
But when it reversed so quickly. But I'm glad I got out and didn't. I was thinking, oh, it will pull back. And I'm like, nope, I do this to myself. And then, so I obeyed my own rule, and then I got out. And then quickly, because I have this saying that if the market is not going down, it's going up or sideways. And this looked like an up because of what had happened with that CPP thing.
Well, with Powell, I think that I think you were here earlier when I talked about how when you see this happen, when you know Powell is talking, and ideally you're, trying to listen to him, or you've got some sort of news service that you know what's going on, what's being said. When you hear that he's saying good things and the market's reacting positively, you just got to buy. You just got to get long, and you got to figure out, okay, how do I stay long? And I think that how you stay long in this today was you've got to risk to below the low of the day, right? If you're getting long in here or even up in here, you've got to risk to below the low of the day.
Oh, okay.
And then size appropriately for that.
I just took a one spread, and then when it pulled back here just a little bit here with that long break, see the first two candles and then the red and then that dip, I got out for that spread, for that spread that I had, and then I jumped in somewhere around on the second going up green candle. And then stayed, so I was in, and then when I started doing this again up here with those 5 down, then I got out.
Okay. See, okay.
Because I was like,
I understand why you were a little nervous and maybe a little gun shy, and this will come with experience, right? The knowing that when this starts to happen, your primary goal is stay in the trade, stay with the trend, because it's gonna go, right? You will get to the point where you just know this, that everything is lined up, the catalyst is lined up, and they are buying this thing like crazy now. And there will be, there'll be short covering going on, and it's going to continue. So that's why I'm saying, you have to initially, if you're getting in here, you've got to risk to below the low of the day, and you've got to not get shaken out by a little wick like this. There is no reason to close out your trade here.
No, that was that was for the puts that I had. So
right, closing the puts on this, absolutely, close them as soon as.
When it pulled back a bit, then I quickly closed out and then quickly jumped into a call because my brain again.
Okay.
I'm like, okay, one thing at a time.
Okay, so cool. Okay, good.
When I did that, and then this started pulling down, I didn't want to go below what I had got into. Like my rule was that I didn't want to break. I didn't want to go below how much it cost me to get into it.
Okay.
So when it started getting close to it, I quickly shut it down.
Gotcha.
So I came out with maybe like $1 or something, but that's fine because for what I'm trying to learn discipline because I'm very strong at it.
Yeah.
So I want to, at least to the end of the year, I just want to learn that discipline of listening to the rules and obeying the rules and not being strong-headed.
Exactly, because you can't force your will on the market.
Exactly.
The market doesn't care what you want. It doesn't care where you entered. It doesn't care if you're winning or losing. You've just got to pay attention to what the market's telling you. And okay, so I misunderstood what was going on here. That's awesome. I'm glad you got a little bit of pullback here and that you got out on that with your puts. That's really cool. And then where you got in with the calls, that was really good. That was a really nice entry there. So kudos on that. Well done. I would say that here, though, you should have been trying to stay in. I can see why you kind of would have been wondering, is this going to go? What's going on? But notice that when it pulled back.
I don't have this red thing that you have. Like, I try to keep my charts very clean, or else my brain, I don't know, take it. So I go with the RSI, and yeah, the RSI is basically, so I look at how the RSI is going. When it changed gear, and then I'm like, okay, right. And the price action. So that maybe I need to put at least one of these on there.
Well,
so
if you're going to be day trading, you've got to have VWAP. That's what this teal line, the thick line here is. That's VWAP. And then these other little dotted lines are just standard deviations of VWAP. Now, you don't need to have those, but every single day trader in the world has VWAP on their chart. And most day traders have another sort of short-term moving average or two. So my pink line here is a 9-period moving average, and then the blue one is a 21-period moving average. And I just have those so that I can see how stretched is this right now, right? And you can see up here, it was getting really, here it got stretched away from the 9-period moving average. Here it got a little stretched away from it. But notice when we pulled back, how it bounced pretty much off that level. And I bet you if I change this to 8, it's probably almost perfect on 8. Yeah, look at that. So this sort of suggests that SPY traders are using an 8-period moving average. And see how it like perfectly bounced there? So I would have been waiting for a break below this moving average. And I probably actually, because like I said, I really want to stay in this trade. I probably would have waited for a break below this little 2-bar consolidation. And that means my stop would have been around 437 cents kind of thing. Down here is where my stop would have been. Because this is, to me, this is setting up a really nice bull flag. These little consolidations, these little pullbacks like this, perfectly normal. And this gives you an excellent place to add. Draw a line across it like that. There's your bull flag. Duplicate that if you need to see it even clearer.
Yeah, that's true right there.
Okay.
Broke above it. Yeah.
And then, if you want to, and you should.
This is a 5-minute chart? Okay.
This is a 5-minute chart. Usually intraday, I actually use a 2-minute chart. But I think that, if you're newer, it should probably be a 5-minute chart. A 2-minute chart's a little too noisy.
I have a 3-minute chart and a 1-minute chart, and then a 15-minute chart. So I realized that I do have the view up, but I obviously don't fully understand it. So I do have the view up on my stuff, but I guess I'm not obviously not using it. I more look at the way that the thing is moving. I definitely need to do more studying, but the flags, like what you just drew, I drew that, and then I have the gaps, and I go with the gaps. So because it had, anyway.
Okay.
I fully understand what you are saying, and I am gonna go back and look at the videos that you have. If you would be so kind to send me these two, the video for the charts again.
For the which?
Or these to understand these.
Oh, you mean all the technical analysis videos?
Yeah.
If you just go back into the session recordings channel.
I am looking.
And then go all the way back to the beginning of that channel. Like I know it's going to be a lot of scrolling to get back all the way to the beginning, to the very
I
first.
just held down the thing and moved after that. Okay.
But yeah, it started being now apparently some of the links might not work. Some of the sessions got accidentally deleted, unfortunately. And I'm trying to figure if there's a way to get them back. But yeah, so a couple of sessions might not actually be there, which is kind of a drag, but most of them are there. And like next week, you come here next week, you'll learn a lot then, and we'll go over a bunch of the stuff. But the most important stuff is like support and resistance and your moving averages. Those are the most important things to brush up on for day trading. I don't really think you need to use our RSI for day trading. But if you've got a way of using it that you like and it works for you, that's awesome. Because this is also all about making things work for you, right? You've got to find the things that work for you and use them and have rules for them. So but I think you'll find that most day traders don't use a whole lot of indicators. It'll be some moving averages, VWAP, support resistance lines, all sorts of support and resistance lines, and volume, of course. And you can see here one of the things that it's hard to see on this chart because this chart moves so much. Let's see it here better. I want to show you something that my charts do automatically, but that you should probably do manually if you have to. See here how I mark out. It automatically marks the low of the day. And then these dotted lines, they're the previous. So the previous low, and I mark the previous close. Because, on your charts, you don't always see to what's going on the day before. Right?
Yeah.
Or into the pre-market. You can see I automatically mark the high and the low from the pre-market. That's what these yellow lines are. So all these levels will often come into play through the day. It's interesting. Like here, this dotted line that's showing you the high, the previous high. Okay, so that high comes from the previous day, which was right here. All right.
Yeah.
What happened when we opened? Now this is the Dow we're looking at. When we opened, what did we do? We came up to the previous day's high, exactly to the penny, and then pulled back. And then look what happened when Powell was speaking. Look how the previous day's high again. Well, look here how it acted as resistance again, and then look how it acted as support right there. So knowing where that previous day high is important, because then you're looking at that and go, why did price stop there? Oh, right, it was the previous day's high. So if you can, if you're using TradingView or something, I think somebody wrote a script to put all that stuff in on TradingView. But those levels are kind of handy because they get just marked in automatically for me, which is kind of nice to have. And so, yeah, you want to take your levels from the previous day. And if there were important support and resistance levels the previous day, you might want to mark those down as well. Like this area here was pretty important on the previous day. And look at that, it sort of corresponds with there. Do you see this?
Yeah.
See, resistance, support. And then what happens the next day? We pause in that area. And then after we break through it, we come up, we pause again right there. And we also pause it at VWAP, right? But that level from the previous day became important again today. So simple little things like just marking in levels like that, can be so important and really help you.
Yeah.
I think didn't intend to start the day trading session today, but
No, it's good. Then I can go and keep practicing.
Exactly.
When we have it next week, I would have actually learned something, because sometimes I feel like just studying isn't good enough. I need to be out there actually pressing buttons and but it's analyzing my mistakes is what where it would be helpful.
Exactly. And looking at the chart, I mean, right now you need to draw lines everywhere. Just you see something. Oh, look at price stopped here. Draw a line. Oh, why did price stop there? Draw a line. And it's gonna mess up your charts. It's gonna look messy, but it'll teach you what are good lines and what are bad lines, right?
Okay.
You're only going to learn that by drawing lines, like in the in the videos and everything, and in the sessions that I've done. I've described how to draw a good support and resistance, but to really learn it, to really have it sink in, you've got to go draw those lines. So my biggest suggestion is just draw all over your charts. And just keep drawing things. That's how you draw this flag. You can draw this flag when it starts forming. You can draw this when it starts forming. And if it doesn't work out the way you think it would when you first drew it, no big deal. You can just redraw it or delete them or whatever, right?
Yeah.
But the point is when you draw enough of these lines, you'll really start to get a sense for what works and what doesn't. So don't be afraid to draw lines.
Okay, here. Thank you so much. Appreciate it.
Oh, you're welcome. Okay, but I'm kind of done. So anyway, this is November's calendar. This is irrelevant. So like we said, next Wednesday at 7 p.m. Eastern, we are going to do a ticker talk, and we're really going to focus on day trading on that one. So bring your day trading tickers, and if you have traded something or if you have watched something, I think it'd be really cool. Like I said earlier, if everybody pick a stock that morning, something that's got a catalyst, you don't even actually have to trade it, but watch it and draw the chart as if you were trading it, and then bring that chart and show us that chart, so that we can talk about it. Because I think that'll be so helpful for people. So we'll do that next week, a week from today. And I will have, in the next couple of days, I'll have the December calendar for the rest of the month. We'll have that posted in the Discord. So thanks everybody for coming out. A really long session today, but that's cool. We had a lot of fun, I think. Hopefully everybody, learned a few things. And really looking forward to tomorrow. I think that tomorrow could be a really fun day. All we need is a good number tomorrow morning, and we'll have another great day. So if you made it this far, hit that like button, and we will see you all again next time. Thanks for coming out, everybody.